We're going to start with the big after-hour story, of course. It's Apple, surging after beating on the top of the bottom line. The conference call kicking off right now. Take a look at the stock, up almost 5.5%. Full team coverage. Josh Lipton in Cupertino outside of Apple HQ. Gene Munster monitoring the call on his red iPhone. Let's kick it off with Josh, who just spoke to Tim Cook. Josh?
So, Carl, I did have the chance to catch up with Apple CEO Tim Cook. And one question, Carl, right off the back was clearly, what are the trends he's seeing in China? Greater China revenue, Carl, $10.22 billion. Now, that was down 22%. But I asked Cook, what are the trends he's seeing there? Is he seeing signs of improvement? And Cook telling CNBC he is, saying March was better than the average for the quarter. We adjusted price as we got into the quarter. We adjusted it to take back the weakness in the currency. Next, we rolled out our trade-in program that had gotten some success in the United States. And I believe that the trade relationship, I don't mean the tariff, I mean the tone, is much better today than it was in the November-December timeframe. That affects consumer confidence in a positive way. Also asked Carl about the replacement cycle. Listen, we know that's lengthening. People are keeping their iPhones longer. It's something Apple itself has talked about on the conference calls. The executives at Apple argue they do have levers they can pull, though. They talk about pricing plans. They talk about their trade-in programs. I asked Cook how well those are working. Cook telling us a combination of the trade-in program and the installment plans have led our retail and online performances to be markedly better than they were. And I feel that is gaining traction. Clearly, the price adjustment in China has helped as well, both the part that we did and the part in April that the government really led with their stimulus program of the VAT, the value-added tax reduction. And finally, Carl, I did ask him about Qualcomm. Obviously, a very nasty legal fight there. We covered it extensively on CNBC. Then those two companies made that deal right during opening arguments in that courthouse in San Diego. Asked Cook, listen, what changed? What brought you to the table there? Cook telling us we came to an arrangement on three really key things. One was a multi-year supply arrangement. The second was a royalty rate and a direct license, which was very important to both parties. And then the third thing was get rid of the bloody litigation. And so those three things lined up, and we found the intersection of all those things that would be good for both companies. And it is good to have that behind us. Conference call is ticking off right now, Carl. I'll bring you headlines as they come. Back to you.
All right, Josh, thanks. We'll check in with you later, including tonight's move. Apple is up more than 45% from the January 3rd low. Are Apple's woes behind it? And do you keep buying the stock? Guy Adami, what do we do?
Well, no, so you can't just start with that. I mean, we've been doing this so long. This is your maiden voyage. I mean, this is unbelievable. This
You
is
always have
fast
questions,
money.
and it's not about me.
Slip that through. Clap him in.
That's
can't believe he's
CNBC
here.
royalty.
You just can't believe it.
Now I'll answer your question. And I'm not going to pretend to be disingenuous for me to pretend I've been some raging Apple bull. I have not. Most of the people on the desk have. I haven't. But one thing we've said is as revenues continue to grow in services, and now they're 19.7%, the valuation of Apple has to get better. And that, I think, what's happening now. The question you have to ask yourself is, as that number of services goes from 20% to 25%, what is the right multiple for Apple? I would submit it's close to a market multiple, maybe 18 times. That gets you a $235 stock thereabouts. If you want to give them a bit of a discount, 16 and a half, it's fairly priced here. But I think that's the calculus that you have to do going out of these numbers now.
Well, what's interesting is actually the street now seems to be giving you a hybrid valuation, right? You're getting guys that are giving you essentially a software valuation for half of it, or at least proportionate to the revenues and services, blended with a hardware valuation. And I think it does get you actually somewhere around the S&P, which I think if you count Apple X cash, it's actually there's still a lot of value here. When you add in the fact that this company is going to do $50 billion of capital markets activity, probably in the form of buybacks, maybe they increase the dividend, but they pay you well. I don't see why you don't stay long the stock, despite a stock that was so overbought, so outperformed the rest of the market going into this. It makes this move, to me, after market, very impressive.
Although going into the print it didn't run in hot, right? That helped.
That's true.
I think, last night's Google disappointment clearly didn't. I'm surprised it actually wasn't hit worse, that everything wasn't hit worse. But, they did increase the dividend. The buyback is big. That's a really aggressive buyback. Google, you really could learn a lot from the buyback activity at Apple, just throwing that in there. But I think I agree with you. It's about fairly-ish priced, which you wouldn't think that something this big would actually be. It's fairly priced. I own it. It's not a giant position. I probably wouldn't add here, but I think there's a big sigh of relief that China that it didn't get worse. In fact, it seemed to have gotten better. They talked about repricing a little bit in March. Maybe that's why some of the hardware gross margin was, I think, a little bit softer. I don't know. We'll see what they say on the call. But big sigh of relief as an owner.
Here's my question. If Cook's comments about tariffs, right, and China tone being better, does that mean we can stick with the cyclical hardware unit story a little bit longer?
Maybe. I mean, I think, listen, a lot of this is priced in. As you mentioned, we're up 45% off the lows. We've priced a lot of this in. I think the risk to Apple here is this as good as it gets? So a lot of stuff in this report was fantastic, but a couple things that weren't so fantastic, right? We have year-over-year revenue declines. Apple hasn't really seen that. We have some concerns about the iPhone sales. Yeah, they were better than Street expected, but they were still down. Are they going to be able to take that share back? We saw Google spending a lot of money on their Pixel in competition. So at the fairly valued price that it is, as everybody somewhat agrees on here,
I don't.
You think there's more upside? Well, then maybe this isn't as good as it gets. But I think this is about as good as it gets.
I think in terms of valuation, in terms of what the market is expected here, in terms of what I think the consensus is double-digit declines on iPhone units. I mean, there's no secret to that. That's in the price. So to me, if this company has any upside, I think both from services, which is, let's face it, the delta in today's move from a flat number to where it is all about services, because I think the market could have been at 17% on services. But I tell you, look, in this market, in this, where we are at whatever stage of this rally you want to call this, Apple to me seems to be one of the safest plays relative to what I think is a market that's probably a little frothy.
We love to talk about cash levels whenever Apple comes up. Cash quarter on quarter down 8%. Down 8% to 225. Interesting.
Which is still a staggering number, though. I mean, if we talk about down 8%, still 225. Yeah, it is interesting. But to Karen's point there, at least they're putting the money to work. Now, you can argue maybe they should be making acquisitions, but the fact that $75 billion buyback is not insignificant at all. And I think Brian makes an excellent point. I think if service revenues were declining and were 14% with the numbers you cited, we'd have a much different story now. But the product mix is changing, and I think the valuation has to change as well.
That's the question,
right? It seems to be.
The services depend on iPhone growth. That's how they get their services. People aren't all of a sudden just signing up for Apple services without a phone. So if you have a decline in their core product, do you still get that growth?
I think people do sign up for some services with a phone they already own. That they didn't buy a new one. That would be the best case scenario, right? They buy a new one and they load it up with all kinds of services. But I think you'll see some adding to phones that are out there.
You don't think that Cook's installed base story, billion phones around the world, that doesn't ring to you?
I think it's in the price is what I'm saying. I'm not arguing that the story doesn't work. I'm just saying at these levels, 45% off the low, these are all things that we know. So the risk here is to the downside. That's all I'm saying. I don't think you have to short it. I don't think Apple's going out of business. All I'm saying, if you've caught this 45% run, take some off the table, buy yourself a new iPhone.
So one of those age-old conversations about Apple is, are you an investor or are you a trader, right? And I think people line up on both sides of this. And I think this is a great time, if I may, kind of interpret some of your criticism.
Please do.
This isn't time to be an investor. Because I think, ultimately, look, I want to own Apple long term, and I want to own it because if you guys Carl, you bring up the very important installed base. It's, outside of Facebook, who's got a more ludicrously, let me work on my hyperbole. Let's just say this is a tremendous asset for Apple, and they continue to lever it. And let's face it, we all would agree they haven't really levered this enough. But when I think of the multiple that services companies get, whether it's AWS or whether it's Salesforce, and I think of the management team at Apple, why wouldn't I be giving these guys a premium, especially on that installed base, to be an investor long term and maybe be cautious on the short term? I think you can be tactical, but I don't think you want to run far away.
Well, that's the thing. What is the value? Karen and I were just talking about it before the show. What's the right valuation for their services business? We sort of went back and forth maybe 25 times. But I don't know if that's right. I mean, you can make an argument that it should be more than that, or maybe it shouldn't be as much because they're such a mature company. I don't know, but I think 25 is reasonable. You can do the math in your head. But I think, again, Brian brings up...
I can do math in my head. Hold on. Would you say I couldn't do math in my head?
I said you can't do the math in your head.
He called you out on your math skills.
It's your tinnitus that's creating problems. Number one, they sell things on CNBC for that.
Get out of here.
Number two, it's actually been a good trading stock. If you think about it, this was a $225 stock at the end of last year, traded down to $145, and here we are again. So for traders, that's a panacea. So you can make the argument it should be investor, not trader, but quite frankly, this has become a good trading stock.